Hello there and welcome to my real estate video blog. My name is Kodi Riddle and today we are going to talk about the monthly market report. It is October 2021. I am Kodi Riddle, real estate broker, been in this business for 23 years, and I want to bring the latest and greatest info to you sellers and buyers so that you can make a sound decision for yourself and we can start forecasting what's coming up in the next 3 months as well as the next year. So let's get started. Monthly market report for October 2021. And I'm going to start with this quote from Bill McBride, Calculated Risk. My sense is the Case-Shiller national annual growth rate of 19.7% is probably close to a peak, and that year over year, price increases will slow later this year, 2021. So locally here in the greater Phoenix area, we had a growth rate year over last of just over 23%. And I am in complete agreement with Mr. McBride that that is a peak and will not continue to rise. But what is critically important is that you all hear what I'm going to say in the next few slides, because that does not mean that we are going to tank, that all of a sudden this market is going to have a crash like 2008, 9, and 10. I do not believe that's going to happen, and let me share with you why. Here is that price appreciation. You can see Arizona here, 23.9% year over last. Crazy price appreciation kind of numbers. Here's the biggest thing, and Ivy Zellman, listen to how she says it. Closings are set to decline roughly 10% year over year in the second half of this year, 2021. Home price appreciation is on the cusp of flipping to a decelerating trend. Now, what does that mean? What does a decelerating trend mean? This means do not hear it wrong. It's really, really critical. I'm not saying that prices are going to decrease. I am saying that the rate of appreciation is going to decelerate. We are going to come off the gas in a big way. We are not going to have a 23% increase year over year. Again, it's not going to happen. This is my forecast. This is what I believe, and I believe it comes down to supply and demand. So let's get back at it. Okay, so this is the estimated home price performance that we are buying into. 11.74% in 2021. I think next year you are going to see a increase of around 6%. And then it's going to start tapering off, but the increase is not going to be there, right? It's going to be there. Your increase is still there. It's just going to be much lower. So I hope that really makes sense to everybody. So if you're a home seller, right, and you sell this year, great, you're going to do great. And if you wait one more year, you're not going to do as great as you did the last 12 months, but you're not going to lose either. Okay? So I don't know if anybody's telling you otherwise. As far as your home price, I do not believe it's going to come down or decrease. Okay? And the deceleration of values in the appreciation is what is going to happen. But what about the fourth quarter? So I think what you are going to find out is we're going to see headlines that are contradictory. And I'm going to kind of talk to you about why that is. It is really hard to figure out what's going to happen in the fourth quarter, because what are they comparing it to, right? What are we comparing? Are we comparing it over last year, a pandemic year? Or are we going to compare it over the last, what we would consider a normal year, which is 2019? So Diana Olick with CNBC's real estate correspondent says, fall is usually the start of the slower season for the housing market, but nothing is usual in today's pandemic-driven housing market. Potential home buyers are seeing a slight rise in inventory and consequently rushing back into the fray. Now, sidebar, I don't know that they're rushing back into the fray, but they are back into it, without a doubt. Mortgage applications to purchase a home jumped 7% last week from the previous week. That is the highest level since April of this year. Okay, so this is what I was referring to, that home sales are very difficult to forecast. How you see the green line, that's where we are now, that's 2021. You see that blue line, that was our last normal year, 2019. But then you see that crazy 2020 line that, goodness, you really can't call that anything normal, that's for sure. So home sales are on the left side, and you see across the bottom the year in months. So 2020, like I said, was nothing like the norm in 2019. And so why it seems things may be slowing down is if they're comparing it to 2020, well, sure, we had a crazy home purchase last quarter in 2020. It was off the charts crazy. So if we're going to compare things to 2020, it's going to seem like things are slowing down. But if we go back and we go to a normal year like 2019, which was a phenomenal year in home sales, right? If we go back and we compare it to the last normal year, well, then we're doing wonderful. So that's why you're going to see some headlines that might say one or the other, and it's depending on what year they're comparing it to. So be mindful of that. Actually, just stick with me and you'll get some great information. So existing home sales, this goes back all the way to 2012. So as I mentioned, look at that 2019. Look at 2019. The only year that was better than that was 2017. And we're doing better than that now in 2021 for the sheer amount of home sales. So I think everything is very comfortable. You can sell your home and feel comfortable. And I'm going to show you why you can buy a home right now and feel comfortable. Why you're going to wish you bought now over maybe if you wait, right? We're going to get to that here in a minute. So again, reiterating why home sales are very difficult to forecast. You see all 3 years here and that crazy orange line showing you 2020. So if we continue to just stay on the level we are, one heck of a year where we're beating a wonderful 2019 in home sales, but we are not as high as the 2020 home sales for the fourth quarter. So that's why, again, I want to reiterate, you might see some crazy headlines, and this is the point. Okay, so active monthly listing count. So the peaks, this is a significant difference that I'm going to show you again going back 2017, 18, 19. You can see the peak of listing count. One happened in August, one happened September, October, all there real close together. But look what happened in 2020. 2020, the active listing peak was in April. Very, very different from the prior years. So the challenge moving forward, we got to close that gap. The sales, the last half of 2020, the sales were exponentially high. But the listings for the last half of 2020 declined. So we need to find that way. How are we going to close this gap? What's going to happen this year to do so? When will the listing peak be in 2021, right? Have we already seen it? Are we going to see it in the next couple of months? Here are the 3 options, right? Our listing numbers are going to go up. Our listing numbers are going to stay the same, and our listing numbers are going to decline. What's going to happen? We don't know what's going to happen. But there are 3 reasons that listings may continue to increase throughout this fall and into winter. Number 1, pent-up selling demand. Homeowners may be more comfortable putting their homes on the market as more and more Americans are getting vaccinated. Number 2, new construction is starting to take off. There's going to be more options for current homeowners to consider when they sell. The lack of options has slowed many potential sellers in the past. So those of you wondering, those sellers wondering, when I sell my home, what am I going to do? Right? A new construction is a great and viable option. And number 3, the 3 reasons, number 3, that we may continue to increase our listing count is the end of forbearance is going to create new listings. Now, I've talked about this in the past, right? The end of the forbearance program isn't going to lead to a wave of foreclosures that are going to make it so crazy and flip the tables and turn this wonderful seller's market into a complete decline, right? It's just not going to do that because those homeowners actually have equity in those properties. And they understand that, yes, while they may need to sell because the cost of taking care of that home is too high, they can sell because they have plenty of equity in the property to cover the expense of selling. So those of you still holding out for that increase in forbearance, I'm telling you, it's not going to happen. Okay, now the most important conversation that is driving everything right now are interest rates. So here's where we really need to get some answers to where do I go if I sell my home, right? Should I even be selling my home right now? Will I make more money next year? I've already kind of shared with you that, yeah, you can make more money if you wait till next year. However, interest rates are your kicker. Let's chat about them. The single biggest risk to housing, rising mortgage rates, is a real possibility in the next year, and that could bring prices down. Further, other economic, financial, and confidence challenges could also result in a drop of flattening of home prices, even with solid buyers in place. But a drop or a flattening in home prices is a far cry from the crash we saw during the Great Recession. Again, I could not agree more with Ali Wolf, the chief economist of Zonda. So here we go, mortgage rates. Freddie Mac 30-year fixed rate, we jumped up to above 3%. Oh my gosh, right? We increased above a whole 3%. Now, it may sound silly, right? 3% is so dang low, but it's important to know that it did go up. Mortgage rates jump above 3%. Many factors led to this increase, including the Federal Reserve communicating that it will taper its support of the capital markets. That means their purchase of the mortgage-based loans. They are going to taper that support. They're not going to purchase so many. The broadening of inflation and emerging energy supply shortages, which compound other labor and materials shortages. So this is the projection for mortgage rates, which I want you to pay attention to, right? Really, really listen and look at this because I'm going to show you what can happen and what kind of a home or loan you can afford and how that will change if these interest rates go up. So right here, the projections are Freddie Mac is going to go up. In the first quarter of 2022, they're all looking to come up in the first quarter of 2022, up again in the second quarter of 2022, and then up again in the third quarter of 2022. So regular mortgage rate increases coming up over the next 12 months. So mortgage rates, Freddie Mac, 30-year fixed rate, here's where they're going. Just another way to kind of show you on a graph. So this is the piece that I want you to pay attention to because look what happens. This is the cost of waiting. If you are a buyer, this is the cost of waiting. What are you waiting for? If you want to buy a home, do not be that person that says, I shoulda, coulda, woulda. Buy it in the fourth quarter of 2021. Because when those interest rates go up, look what happens. Right now, 2.75 interest rates giving you a payment on a $400,000 home of $1,633. But what happens if those mortgage rates increase? This is what happens right here. You now, when you could have afforded a $400,000 home, $60,000 less is the home you're going to be able to afford if those interest rates go up to 4%. So see that difference? That is a big difference. That is major purchasing power decline, right? You don't want to be that person that makes that mistake. So definitely if you are looking to purchase now. I think you're going to be happy. Homeownership is one of the fundamental keys to accumulating wealth in America, hence why it has been integrally linked to achieving the American dream. Not only can owning a home provide a roof over your head and a secure place to live, but because mortgage payments generally remain fixed while rents may rise over time, a home can also be a very effective hedge against inflation. Because your mortgage payments stay the same. They don't go up. Together, these features can give homeowners an enormous advantage over renters when it comes to accumulating wealth. Because now, instead of putting that home into your rent and keeping a roof over your head, you can put that home into a savings somewhere that it can be saved and accumulate and grow, right? So this is a wonderful graph. If you purchased, I'm going to go here. If you purchased a home for $350,000 in January of 2021, you purchased that home for $350,000, right? Through that rate of inflation that I spoke to you earlier about, you will have a $461,000 home in 6 years. 2026. 21, 22, 23, 24, 25, 26. 5 years from January 2021 to January 2026, based on price appreciation projection from the Home Price Expectation Survey. So again, if you're going to purchase a home, do it now. And that is it. I hope I helped you to make plans based on good information, make plans for your family's best interest and for your future. And I hope we helped. Thank you again, Kodi Riddle. Reach out to us if you are in the greater Phoenix area and you need help buying or selling a home. We are here for you.